All right, hello everyone, and hope you guys are having a good weekend. As usual, let's do a short wrap up of what happened last week, see if there's anything we can learn from, and move, forward to the next week. Now, as you can see here, I've put all of November in already, so I put those on last week or at the beginning of the week. And let's get my head out of the way so we can see last week. So this is 27th to the 31st of October, and as you can see, we've got the swing days here for all of the assets we're looking at, and the trade hours. As you know, these were all posted weeks in advance. Okay, only the videos get posted on the day. So if we take a look, we've got gold on a Thursday, euro dollar Monday and Thursday or Friday, Bitcoin Monday and Friday, SP 500 Tuesday or Wednesday, Dow Jones Monday and Wednesday and Friday, Nasdaq Monday or Tuesday and Friday. Now, here you got to be a little careful, which we talked about before. I do mention these all the time when they come up. If we've got common days in the indices, Wednesday, Monday, Tuesday, these mean that because the indices more often than not go together, you got to look out for Monday, Tuesday, Wednesday. And because the prices are high on the indices, Monday, Tuesday, Wednesday, we need to be looking for a turnaround. All right. So that's the thing. And let's just do gold because I do gold. And let's see what happens. So this is, as you can see, gold, right? And what we see with gold is Thursday swing day, right? So that was Thursday swing day at a cause. Remember, we're looking for cause and consequence, and sometimes people get it mixed up with demand and supply. It's not demand and supply, it's cause and consequence, because that's just how it is. Okay, because if I was to draw demand and supply, it would be different. It looks like demand and supply from the outside, but no. If I was to draw just demand and supply at the moment, this would be what's happening here. That would be like we'd be waiting to come into there. But we're day trading, so we're looking for cause and consequence. So if you took the technical analysis course for pricing and timing, okay, you should know where we're looking at for the swing days. Once the market comes into the zone that we're looking at, if it's a swing day and the market's down, we want to go up. When? At the trading hour. If the price is low at the trading hour. Now, as you can see, the market is gone low here on a Thursday. And on Tuesday, in fact, it was lower. But Wednesday, it was there. Thursday at the opening, we came low, all right, which is fine. That was the trading hour, and this is actually was pretty much when I was doing the video. I was looking at the markets to do the video, and I was like, it was right there. And then I looked at the book to see if those hours were good. If you took timing, you can pretty much say, oh, these are good hours, these are good hours. Sometimes in the videos I mention them. Also, what I have done is, if you go to Vimeo, what I have done is this. I've done all the videos here. Let's do this for last week. So anybody who's interested can go in there and see all the videos up here. So let's do this. And they're all public right now, right? They'll only be public once the week is over. So all of the videos for last week, you want to look at the long ones, all right? So, for example, not this 5-minute one. Okay, this is a 5-minute one. Let's see. Okay, don't worry about the 5-minute one. Look at the 23:45. Look at the 18:27, 26:53. So you'll see all the October 29s and so on. But look at the longer ones because the short ones are in another language, all right? So you can check them all out as well. So on Thursday, that was it. And that's how the market turned out. So there were 2 positions on that. I took profit on the first one. And this one, I just moved the stop to the upside. So no risk at all. All right. So if you take a look at the previous day's hours as well with gold, You can see the markets to the downside, obviously, because of the big impulse push down, right? So we've got the big impulse wave there, market pushing to the downside. And then what do we have? Sideways market. What do? Sell the highs at the trading hour, okay? Now, if you sold on the trading hours, okay, so as you can see, look, this is the previous week, right? So let's do this. And let's in fact make me a little smaller as well. There we go. All right, so this is the previous week. The market took a dump. And then as you can see from the highs at the trading hours, sell off. We're at the highs at trading hours. Again, look, this is where they sold off, closing gap, selling off. Okay, selling off. And then this week we had Monday, Tuesday, Wednesday, or coming all the way down. Look, trading hours, selling off. Okay, all the way into where? Thursday, where the market stopped selling and started buying. Nice and easy. Okay, and if you just took that trade this week, you should have been just fine. You know, doing all right. So you needed to either wait for that, or if you didn't want to wait, because the market made an impulse down, then what you needed to do was sell it lower into where? Into this zone. All right. There were two zones for cause and consequence. One here, one here. At the end of the day, that one broke and popped down into there, which was all fine. Okay. And as you can see, the market also had swing days there from the previous week, which were, let's get rid of these, which were a push to the downside, as you can see. All right, so there, 2 days. Now, if you bought that, you still would have been okay. Why? Because let's take a look. That's the 23rd of October, and that's the 24th of October. So if I go to the 23rd of October and the 24th, it would be here. All right, so that's the 23rd. All right, now if you bought on the 23rd or the 24th, you still would have made money. Why? Well, let's take a look. If you bought thinking, well, I think we're going to turn up from here because gold's on an uptrend, right? And it's logical, so you can do that, no problem. When do you buy something? Well, according to our principle, the way to do it with a tight stop loss is if we're down. So if we're going to buy, we want a cheap price, okay? And then what we want to do is buy it at the trading hours. So if I was to do that, let's do what would happen. So on a Tuesday or a Wednesday, right? What was the day? We had the 23rd and the 24th. This is the 23rd. And this is the 24th. Now here, if you bought, the lowest you could really do, the lowest was here, look, right there, just like I did on Thursday, right? The market was up a little bit, so I went in. Now, if you went up here, you still had room to push into there. Why there? Because that's the high with the gap. You see how it filled the gap there. Then what happens? Then the market gets up here. Look, this is a trading hour here. So the market is up at a target at a trading hour. Once the market's done this big impulse wave to the downside, obviously the market is going up to sell off. Okay, so let's get rid of that. So here you should be taking profit or moving your stops up, just like I did on Thursday. I took profit and moved the stop up. That's the least you can do, right? Or the best you can do is also say, you know what, I'm going to just close the trade because we were pushing down, and the market might push it down again. This is Thursday. Now, if you sold on a Thursday, because Wednesday and Thursday were swing days, and the market actually followed at a trading hour, look at that, this is a trading hour on Wednesday, and it's a swing day Wednesday, Thursday last week, right? This is last week. And then what happens? Market pushes to the downside. So you still would have been okay. All right, you still would have been okay, as you can see. All right, so knowing the trading hours in advance is obviously an advantage. Now this is Friday. Look what happened on a Friday. Friday, market pushes down into a trading hour. Look, if you bought at the trading hour at the lows, you still would have been okay. If you sold the high after that big move, you still would have been okay. All right, that's New York, that's London, pre-trade session, and this is Asia. Look, Asia sells off. London is buying to push it back to where Asia sold at a trading hour. Even if you didn't sell that and you waited to chuck a Yui, I mean, that's a U-turn, right? If you want to make a U-turn, you still could have done that. We learned how to do that as well to do so. All right, so things shouldn't be too difficult because you got time and price together. All right, so let's take a look at that. And this week, same kind of thing. This is why on a Thursday, it was a swing day. I was happy to go up. All right. But the market's still going down. Now, according to our technical analysis knowledge, you guys know, I know this is not very strong, is it? No, it's not very strong. And this still has potential to go to the downside. And if it does, it could just sell off again to push further down. Where to? Into this zone. All right. And that's fine. Now, if you're using MetaTrader 5, okay, you could do the same kind of setup. I'm actually doing it on there as well. Okay, this is the kind of, oops, is that it? Let me just do this, just bear with me. Whoopa. All right, that's MetaTrader 5. Okay, so as you can see on this one, working on this one as well, to try to do the PSD, not very easy to do actually, but what I'm trying to say is you can draw your zones like this as well. Okay, or you can do what I do. I like to draw things manually. You can say, you know what, this is a daily and this is my zone. All right, cause and consequence. Okay, and you could just plot it along. Demand and supply, these are automated. You can find these anywhere on the internet. But you see, for day trading, for me, it's not very good because it doesn't show you cause and consequence. It just shows you demand supply levels. So you can get in there. But for me, because I'm day trading, I want to get in at the right day, the swing hour and pricing, right, to make a high probability good trade. Then I need cause and consequence. And sometimes, like I said, people get cause and consequence mixed up with support and resistance or demand and supply. It's a different ball game. You probably haven't heard it anywhere else, but you will hear about it if you study at GlobalTrader.Club with the technical analysis methods that I'm using. All right. So with the technical analysis setups, all you need to basically do is to get these setups in rhythm, in line with your swing days. Now let's take a look at the euro dollar. Now euro dollar as well, let's see. This is Monday, Tuesday, Wednesday, Thursday, Monday, Tuesday, Wednesday, Thursday, Friday. So for the euro dollar, we had Monday, Thursday, or Friday. So if you have a Monday high, okay, that's your Monday, Tuesday, Wednesday, Thursday, Friday. All right. Monday, as you can see, the market makes a slight higher high on a Tuesday, but nevertheless selling off. And on Thursday, I also said this could be a good sell-off, pushing it all the way down into there. On the weekly as well, we had that infringement, which is nice and easy. So all we have to do is push further down on a Thursday. All right, as you can see, coming all the way into Friday and closing below the swing. So it's still bearish, nice and easy. I did say this is also bearish, as you can see, impulse, pennant. You know, you want to sell it to the downside. That's fine. At what hours? Well, let's take a look at Thursday, Friday hours, shall we? This is Thursday and Friday. Let's check out the hours. Let's do London, New York. Let's see, 7:20 in my morning. Remember, the hours are UTC +3, right? So you got to match your own hours to that. So Thursday, 7:20, 7:20 in the evening as well. 7:20, where is 7:20? That's your 7:20 there, all right? And then we had 7:20 in the, oh, sorry, that's Friday. I want to look at Thursday. 7:20. That's your 7:20 there. Okay, so 15-minute chart over here. So the market makes that high and then sells off. And then we've got 7:20 in the evening, 7:20 to 7:50. Let's see where that is. 7:20. That's your 7:20 to 7:50 is right there where you can take your profit. Okay, as you can see, market goes down. Let's get rid of these. These white lines are my target lines, all right? And I renew them daily or every Monday on the weekly. So market comes out, as you can see, it just stabilizes. And on Friday, what happened? Let's take a look at Friday. Look, sudden moves. Okay, so I put here all kinds of comments which you should take into account. So I got 9:15, that's London pre-trade, 2:25 New York pre-trade. So that's 9:15. That's there. 2 o'clock, 2:20 was it? Let's double check. Yep, 2:25. So 9:15, 2:25, and then I've got sudden move to 3:20. Sudden move to 3:20. Okay, there. That's 2:20. So 3:20 is 4 bars forward. It's a 15-minute chart. So sudden move, we break down into 3:20 and to 5:20. And if we have direction, you should target 6:30, then can push to 10 o'clock. 6:30 is, there we go. We've got to push into 6:30. That's your 6:30 and can go into 10 o'clock. Let's take a look at where's 10 o'clock. That's your 10:20 there. All right, so nice and easy, pushing into 6:30 and sticking around here. So if you did that, well done. Let's take a look at SP 500. Now this is SP 500. Now remember, with SP 500, Tuesday or Wednesday, all right? Tuesday, Wednesday, market selling off, as you can see. All good. Coming into targets, as you can see, right? So all these targets you can spot here, all right? So 52, what else do I have there? 52 and below 52 is 49. So you would have targeted 6822, 6809. 6822 is there. All right, 6822. Nice and easy. 6809 is there. All right, so in between that zone there. And what time was that? That was 8:15. Let's see on a Friday. What do we have? 6:30. So market, let's see what happened at 6:30. Market 5, market 6:30 and pushing down. If it has direction, you can push down. It came to the targets. Now, obviously, look, we're not just trading on time. We're trading on time and price with targets. So if you get to a target, especially on a PST daily, You don't want to be mucking around staring at it because it's going to go until 10 o'clock, right? You say it's done the targets, okay? We're out of the game. Take your money and have a good weekend, okay? That's the whole idea of having PST targets, because PST pricing is king. It really is. On the weekly, it was too far out, but on the daily, all week, remember, we had these prices adjusted daily. So that's all good. Gone in there. All right. So 6:30. What else did we have on a Friday? Was it 220? I think it was at 220. And let's double check and not be lazy. 225, sudden move to 320. Now this is 320. All right. 320. Wow. And this is 220. So 220, sudden move to 320, and then a big sell-off. All right, nice and easy. First into 630 and then lower into the targets. Nice. And why are we expecting a sell-off? Well, because we're at the tops here. All right, so that's all good. Turn around. And I did say we should be closing the gap, and it has closed the gap here. All right, so that's all good. Let's take a look at Bitcoin. Now, indices you can all check together. All right, so no big deal. Let's take a look at Bitcoin. Remember, with the indices, Monday, Tuesday, and Wednesday, because it was common days for the indices, all those 3 days were important. All right, and as you can see, like on Monday, the market opened with a big gap. And then Tuesday, Wednesday, making a high, and then boom, slapping down. And it was giving us the signal on a Wednesday to turn around in any case, so that was all good. Now, with Bitcoin, what do we have? We had, I think it was a Monday and a Friday, right? Bitcoin Monday, Friday. So let's take a look here. All right. So that's your Sunday, Saturday, Friday. All right. So that's your Friday. Market came down. So we're looking for an up move on a Friday. Also very logical. They bought from here before. You see, Friday, market to the upside. Thursday, Wednesday, Tuesday, Monday. Oh my goodness, that's a swing day. Surprise, surprise. Okay, that's your Monday. Market pushing off. Now let's take a look at Monday, the trading hours, right? Let's see if it did us any good favors. These were the trading hours on Monday. Now look, I've got a target 1045 here. What does that mean? It means the market can do a high on a 1045 and then you can sell on a Tuesday because it's done the high at the end of the day. But let's take a look anyway. Let's not be lazy. Monday. Here we are, Monday, Tuesday, Wednesday. Let's push it all the way to the end so I get the right Monday. Here we are. All right, so Friday, Thursday, Wednesday, Tuesday. This is your Monday. All right, Monday, the 27th of October. And that is what we're looking at. All right, so 27th of October. 1045 was a target. That's your 1045 market pushing from there. Let's see if we had any other hours. Oops, not you. Let's do Monday. So we had 725, 255, 725. That's your 725 there. All right, so market New York makes a high, slightly higher, pushing down. And what else was it? 255 and 12 o'clock. 255 needs to be somewhere along there. That's your 255. 12 o'clock. 12 o'clock is there. So it's done a high. I wonder what time that was. 10 past 5. Nope. So 12 o'clock is here. Okay, so from 12 o'clock, market makes a high, a low going into 245. Look at that. Let's just make this a little bigger. Can we make this a little bigger? So look, market going slightly higher into there, selling off, coming up, again selling off at these hours here. All right, and once it sells off, it never goes back to the high of Monday and sells off. All right, so that's all good. Let's take a look at Tuesday. If you wanted to sell on a Tuesday, what hours did we have? Today is tricky and volatile, disruptive. Ooh, so it looks like a good opportunity for reversal. Why? Because it's disruptive. All right, so what does that mean? It means we're going in a direction and it might disrupt that direction. So let's take a look. 6:30, 8, 9 in the evening. 6:30. is there. 8 o'clock is there. And that's your 9 o'clock. Nice and easy. All right, guys. So market made a fall here. They sold off here. All right. Retraces into those hours and sells off and keeps selling off. Let's check out Wednesday. What time did they sell on a Wednesday? So then if you wanted to follow the move, let's see, that looks like it happened in New York and London pre-trade session. So that would be 12:15, 1:30. 12:15, 1:30, and then we've got 7 o'clock. Energetic move to 7 o'clock. So 12:15 to 1:30. This is, whoops. Oh, come on. 12:15. 1:30 is here. So that's your sell kind of zone. Why? Because we've got a swing day Monday, right? If you've got a swing day Monday and the market is selling, your direction, your bias is to the downside. So you want to check where you're going to sell off. And then we've got what? 7 o'clock market making energetic moves towards 7. That's your 7 o'clock. And if that's not energetic, I don't know what is. What else have I got? Hours that can turn the market afterwards is 7:20 to 10 past 8. 7:20 is the next bar here. 10 past 8 is going to be 3 bars down there. So the market is turned a little bit to the upside, which can target 11:30. All right, so that targeting didn't happen, but the market did come into there. And if we did have targets, you would have taken profit on the downside if you're day trading, or you could be following it, shorting it into Friday. Why? Because the swing day is a Monday and a Friday. So if you were starting to short Monday, you could carry that into Friday. And if you did carry that on a Friday, let's see what happened on a Thursday. And on Friday, you'd be thinking about buying, so no selling. All right. And on Thursday, let's see what hours the market sold at. So we had what? 7:20 in the morning, 7:20 in the evening. So nothing really to do here. 7:20. So that was a low. Okay, so nothing to do. That's your 7:20. And then 7:20 in the evening. So not a lot of action here. All right, you wouldn't have sold here. Why? Because it's down. Okay, the only time you want to be selling is on the upside. So we didn't have any hours that really matched the sell-off on that day. All right, on a Thursday. And Friday was a swing day. So that being a swing day from the lows, you're pushing up. All right, that's your Friday and Saturday, and that's Sunday today. All right, and that's basically it. As you can see, I'll put all the arrows here for the swing days, so you can see they work pretty good. So on those days, you need to take obviously special care, check out your hours, see what you want to do. You don't have to dive in. You can also chuck a UE, like I always say, just, wait for a turnaround, do a U-turn if you want to wait. If you're using the ATAM, waiting for a U-turn, you have to wait for the candles to change color, and then you can dive in to go. All you have to do is though match it to the time, right? So we've got the hours here. You can see the market making a U-turn here. All right, and if you enter there, so obviously you have to put your stop loss above the highs here, so it's not too far out. You should be able to cover the trade quickly and push it to your target as it happens. So that's that. All right, so I hope this little wrap up helped with the swing days and the trading hours. The important thing, as I always say, is if you can match, the swing days and your hours to your technical analysis, that's the best way to trade, because you've got time and price on your side. And if you've come to a target, especially like I said on a PST, right? If you hit a PST target, okay, then obviously you don't want to be mucking around. You want to be making sure you take your profit. Same with anything, like on the weekly. Look, on the weekly, that's red line is HCL1. That HCL1 is 106,740. So 106,740 should be on your cards for taking profit. And look, when it gets there, 106,740 is just there, right? I will make that exact for you. 106,740. So once you kind of like, you come to a target, you're fine. Here you need to, push your stops forward and take some profit, or just completely take a profit, because it's like a weekly PST level, so you don't want to be mucking around, and it's a bounce off level. And on Thursday as well, you can also see if that PST level is also a trading hour. So let's check that as well on a Thursday, sorry. So 7:20, 7:50 and 10:40. So when is that? Oh, look, that's 10:45. So 10:40 was there. So you can see that is a trading hour. It's come to a PST level. Okay. So, you can actually buy there, because the PST level on a weekly, daily trading hour, yes. Okay. It's like good. And you can see the market's just turned around nice and easy. So, it's a matter of bringing these things together. Obviously, knowing technical analysis and timing, you can bring these two together, and it'll just like make your trading very, very effective and efficient, because you know the hours to trade and the prices in advance, so you don't have to be stuck in front of the screen all the time. All right, have a good weekend. All the best. Any queries, dramas, always feel free to drop a line, because I know sometimes time and price, if you haven't taken the course especially, it does get a little tricky, and then people are saying, well, I don't understand how to do this and that. You need to know technical analysis and timing, and you got to bring them together, and then the videos will make sense. Okay, have a good day.